Hi guys, this is Andrew from Trading Mastery and welcome to today's trading tip, which is all about something that might sound a little bit counterintuitive. How to be a terrible investor. You know, one of the greatest investors of all time, Charlie Munger, has a phrase that he says you have to invert everything. Take away what is likely to get you in trouble and just simply do the opposite. In other words, what does it take to be a terrible investor? Think like a terrible investor and just simply do the opposite. Most people are too busy trying to get rich quick, trying to find the fastest, easiest way to make money. And unfortunately, they fall into the trap of many investors fall into, and that is doing a lot of the things that are counterproductive for you to be successful, such as using excessive leverage, such as buying fast-moving markets, such as having a fear of missing out, buying whatever the latest fad is. Somebody says they're getting rich, you're watching others potentially make money, and you can't help but get involved and you start buying into that market as well. These are the types of things that inevitably get investors into trouble and see them lose a lot of money. So what do you need to do? You need to just completely avoid investing in markets where there is leverage, investing in markets that are rapidly rising quickly. Avoid investing in the latest fads to make sure that you stick with what is a proven strategy of success. And it's really interesting because two guys, Peter Lynch and Joel Greenblatt, through the 70s, 80s and 90s, Peter Lynch made about a 29% annual return on investment for more than 12 years. And Joel Greenblatt made about a 48% return on investment annualized with both of them with major money under management in their funds, more than $1 billion. And Joel ended up making close to 48% annualized every year for 10 years. They've been on television, they've written books, they've talked about how they made money. But the vast majority of investors, including virtually every managed fund around the world, for some crazy, idiotic, moronic reason, think that they know better. They know better how to do it. When these wonderful investors, Charlie Munger, Warren Buffett, Joel Greenblatt, Peter Lynch, Sir John Templeton, they've laid it out and they've told people how to get wealthy, buy great quality companies. And as Joel Greenblatt says, the secret to investing is buying businesses that are likely going to be worth a lot more into the future that are trading at a discount today. Figure out what they're worth, figure out that they're likely going to be worth a lot more money in the future, and buy them and don't sell them. That is a simple recipe for success, but it is ignored by the vast majority of financial market participants because for some crazy reason they think there's a better way. And there isn't a better way. And we will continue to prove here at Trading Mastery, not only with our portfolio, but our clients' portfolios, that just investing in great quality global growth businesses at fair prices and holding those positions for lengthy periods of time and managing a portfolio of great companies is a surefire way to give yourself an opportunity of generating a lot of money over time. That's it. There are no secrets. And all you have to do is follow that logical process and avoid doing all the things that terrible investors do. And those terrible investors invest in those markets, derivatives and leverage and, all of those things that you hear about all the time that could potentially get you rich quick. When in actual fact, it will get you poor very quickly. Have a wonderful day. Look after your risk management, look after your trading, and follow the success principles that I've talked about. I'll see you next time.